Investing doesn't have to be a maze of jargon and complex numbers. Our mission, to break down earnings reports in a way that anyone can understand. No fancy hedge fund lingo, no unnecessary complexity. Clear, concise, and actionable insights. We dive into the numbers in the earnings reports and transcripts of earnings calls, so you don't have to. Welcome to Be an Informed Investor channel. This is not a financial recommendation to buy or invest in stocks, but an educational attempt to understand the quarterly earnings report. Hello and welcome. I am Marissa Jones from Williams Analysts. Today we're diving into Nvidia's Q4 2025 earnings report, one of the most anticipated in the tech sector. Nvidia continues to dominate AI and accelerated computing, but beyond the impressive numbers, we'll also uncover insights from financial filings that were not covered in the earnings call, providing investors with a deeper perspective on growth trends, risks, and strategic moves. Nvidia delivered another record-breaking quarter with revenue of $39.3 billion, up 12% quarter-over-quarter and 78% year-over-year. The data center segment fueled this growth, contributing $35.6 billion, up 93% from last year, reflecting continued demand for AI computing. The Blackwell architecture had its fastest ramp ever, generating $11 billion in revenue in just one quarter. On the flip side, gaming revenue declined to $2.5 billion, down 22% from Q3 and 11% year-over-year, due to supply constraints for the RTX 40 and new Blackwell PUS. Professional visualization and automotive segments saw strong double-digit growth, with automotive revenue surging 103% year-over-year as Nvidia expands into self-driving technology. Gross margins came in at 73%, down slightly from Q3 due to higher costs in data center hardware. Net income was $22.1 billion, a massive 80% from last year. Nvidia also announced a quarterly dividend of $0.01 per share and continued its stock buyback program, returning capital to shareholders. Beyond what was covered in the earnings call, here are 3 key takeaways from the financial filings that investors should pay attention to. 1. Rising operating expenses and R&D spend. Nvidia's operating expenses rose 48% year-over-year, reaching $4.7 billion in Q4. While some of this is due to employee compensation, the major driver was increased R&D spending on AI, networking, and semiconductor development. Nvidia expects this trend to continue, meaning long-term profitability will depend on how efficiently these investments translate into future revenue growth. 2. Supply chain and inventory management risks. The inventory balance surged to $10.1 billion, up 30% from the previous quarter, reflecting higher prepayments to suppliers for Blackwell and Grace CPU production. This suggests that Nvidia is securing components in advance to avoid the shortages that impacted gaming GPU supply. But it also means the company is exposed to potential demand fluctuations if market conditions change. 3. Regulatory risks and AI export restrictions. One key risk that Nvidia did not emphasize in the earnings call is the impact of new U.S. export restrictions on AI chips. The U.S. government has expanded controls on high-performance PUS, including H100, B200, and Grace Blackwell processors, limiting sales to China and Middle Eastern markets. Nvidia's 10K filing acknowledges that these regulations could significantly affect future revenue, as China has historically been a key AI hardware buyer. To sum it up, Nvidia's AI dominance continues, but investors should monitor rising R&D costs, inventory buildups, and regulatory risks in the months ahead. With record-breaking earnings and a strong outlook for Q1 2026, Nvidia remains a leader in AI computing. But macroeconomic and policy challenges will shape its trajectory. Thanks for watching, and stay tuned for more financial insights. Please hit the like button and subscribe, and we look forward to bringing you clear analysis of earnings reports.